Hello and welcome to the NewSpaceVision podcast sponsored by LiveView, where we discuss new space technology, finance, and innovation with executives, founders, and more exciting people from the startup and new space ecosystem. I'm Daniel Seide.
And I'm Sam Shivara, and we are the founders of the Earth observation company LiveView and NewSpaceVision. Today's guest is Filip Kocian, investor at Expansion Capital, and a very loud voice, I would say, in the space ecosystem, at least in my LinkedIn bubble. Welcome to the show, Filip.
Thank you guys for the invite. I've been listening for a long time, so good to join.
Yeah. What I always think is that the space, and Daniel and I, we spent yesterday an entire day at the German Space Congress, and it was really like class meeting because like so many people within the ecosystem, right? We have never met in person yet, but you're going to meet Daniel at the conference in a couple of weeks. But I have been becoming more and more, I got to know you a little better from all your writing you're doing on LinkedIn. So we were very interested to get you onto the show. Because we believe that you have a couple of interesting analyses about the space sector, and that's what this show is all about. But maybe before we dive into this, could you tell us what brought you into the space sector originally? What was the tipping point for you to say, hey, I'm going all in?
No, so I realized recently I've been in the space sector for about seven years, so it certainly flies past. And basically in 2018, I went to visit one of the few space companies that we had in the Czech Republic. And at the time, and I really liked it, and I just shoot them a cold email like, hey, I've been for a visit. I really like it. Can I please work with you? And I got basically like a lowest level intern position. And that was my first space job. And since then, it's been quite a fun story.
Yeah. So you said 7 years ago. Did you also participate in the first space investment back then?
No. So I spent first, I think about 4 years of my space career in a mix of, lowest level intern roles and more on like operating and consulting side. And then 3 years ago, I started together with a partner of mine, my first little space industry tiny investment vehicle called Golem. And so basically 2022, I think I spent making a few space investments. And then 2 years ago, I had a lunch with one of the expansion's partner, Ted, in Stockholm. And there was just at the time where expansion started to come together. And Ted was like, well, Filip, come join us. And so the last 2 years I spent with the whole expansion team.
Yeah.
Nice.
And we're gonna dive into expansion a little later as well, because I think it's an interesting setup. I've been at the European Space Conference in 2023, 24, I think, where it was announced that
that sounds right.
So starting with some observations from you on the ecosystem, because I think that there are a couple of investors out there who have a very simple strategy. They just invest in companies which have other great investors, so they just follow the herd. But most of the outsized returns come from contrarian but right investments in areas which others are not seeing. So maybe starting with a hard question straight from the get-go. What is a contrarian take you have on the space ecosystem where you're convinced that you're right?
Okay, no, starting from the difficult. I mean, what I'm always thinking, like, what's contrarian? Because I mean, across the LinkedIn bubble and the conference bubble and the Twitter bubble, there are a lot of people with a lot of opinions, and so then I always wonder, what's actually defined as contrarian. But maybe starting from like one axiom is there are not that many large markets in the space industry today. If you look at like what are the $1 billion+ revenue markets, I think there's about 6 of them. Earth observation mainly across like optical and SAR modalities. Then we've got broadband satcom, satellite manufacturing, launch, and some ground segment. And I mean, this is sort of a position I'm often thinking about, that there are not that many large markets in the space industry. We obviously need large markets to make venture scale returns. And so the way to move from there is either, you need to have a really good thesis on how to disrupt one of these, large dollar markets, or you are creating very new ones. And that's kind of what we are seeing in the ecosystem. Many companies in the market that are sort of existing today, and then some new disruptors are coming. And then also what we've seen in Europe for the last, let's say, 3 years, there are a lot of companies in space manufacturing and return from space, and weather PNT, which are not markets that would be a priori large today, but there is some belief that they can get big over the next 5, 7, 10 years and be able to deliver those venture scale returns.
When people think about a space investor, they most of the time think about the hardware aspect of it, right? Which is then also connected to the manufacturing process, the testing process, etc. With your fund, I mean, you have a bigger portfolio. Is it more software development driven or hardware manufacturing driven, or is it a good balance and mix, a combination of it?
Yes, so what I think is interesting about expansion are two aspects. So one of them is that we started, let's say, as a space-only fund, but we've been doing many more investments on the aerospace and defense domain at large. And I think that's one of the reasons is that there aren't there are obviously many good entrepreneurs building space companies in Europe, but simultaneously there are not that many large markets, and sort of the opportunity in the broader aerospace and defense is much larger. And so we've been spending a lot of our time there, and I personally, let's say, over the last 2 years have been spending probably more my time on aerospace and defense than actually pure space investments. But if we stick with the space investments, at least as far as expansion is concerned, we've got an investments across the entire value chain. So from launch and satellite manufacturing up to very much the application layer. And to your final point about software and hardware, frankly, I don't really like this false dichotomy between software and hardware. What we see both in the space industry, but in general, the most interesting capabilities are sort of like software defined hardware. Or, you take some basic hardware layer, but then you think about what is the way you can modify it with software or change it in real times. Kind of like, there's dumb hardware and there's smart hardware. Like you can looking at sensors, platforms, and there's, I think, area, I'm interested in. I suppose looking at how much value can you extract per kilogram of mass, and if you've got software defined capability, then that value extraction should be much larger.
Yeah, and I think this is also a trend in other industries, right, which you have seen. So what I see very often is for investors that evaluating the software part is way harder for a lot of people, and understanding the differentiators, the USPs on the software angle. It's for us interesting because we are mainly a software company, right? We have more than 70 developers, so software and AI. And I see a lot of satellite manufacturing companies which launch satellites which have like 30 developers, etc., and people who do the manufacturing and testing. So can you have the assumption that today in 2025, because of all the infrastructure investments, it's easier to have a satellite than having the analytics part of it?
No, so I mean, it's a good question, but also a very difficult one. I mean, looking at the data, it's apparent that like upstream space companies on the Earth observation side have raised much more money than the companies on the downstream side.
Yeah.
And they've also produced larger exits, and I think they also generate more revenue. So I mean, those are sort of facts we need to look at. If you look sort of the Earth observation companies that went public during the 2021 SPAC era, they are Black Sky, Planet, they are both making, I think, upwards of 200, safely upwards $200 million revenue annually. And I don't think any of the few well-funded downstream Earth observation analytics companies are getting close there. So I mean, those are the facts we need to begin the discussion with, and apparently on the investment side, it's easier to evaluate that. That being said, I think there are some difficult questions to ask down the line. One of them is like, it really depends which financial metrics you are applying. So if you are talking about the revenues, obviously the upstream EO companies have been doing better. I think that if we were looking at, what is the profitability or return on investment capital, it could start looking very, very differently. And the other part is that as you both know, a lot of the revenues for the upstream companies are coming either from some like bulk satellite imagery by governmental contracts or from like actual space systems divisions that these companies had been setting up.
Which
And
is
so I
an
think that
interesting
is,
twist.
yeah. So I think there's still like an open question who can extract more value.
Yeah, I think yes, we 100% agree that there's still open, right? But I think a lot of people in the past have formed a set an opinion around something. And as Daniel said, it's sometimes very hard to evaluate, like analytically, how do you differentiate there? Because you can't that easily look under the hood. And my view is also that investors are drawn to shiny objects, and a hardware satellite is a shiny object, and therefore they are drawn. Talking about shiny object, I wanted to cover a couple of subsegments of the space industry because you've mentioned that there are not that many big market, right? And one for sure big market is launch, and it will be a growing market because it's ultimately enabling all the other ones. And what we've been seeing over the last couple of years was, I think, like a frenzy around, I want to build a launch company. And at the conference this week, I was struck because there was another company which wanted to build rockets in Germany. And I thought, wow, I wouldn't have thought that there's still companies popping up which want to do this. But what would you say are the most exciting developments in launch? And after that, we would also cover SATCOM and the Earth observation space. But starting with launch, you've posted some things around, for example, Fireflies and Rocket Labs being companies which have now a state of maturity where they can make also exciting moves. But obviously, we also have this relatively rich ecosystem of European small set launchers, which are about to come of age and launch the first satellites, hopefully, into space in the next couple of years. So what are you most excited about in that pocket of the market, which is called launchers?
Yeah, no, and this is obviously another interesting, question for hours of discussion.
Yeah.
I think two things immediately coming to my mind. So the first one is sort of this interesting dichotomy between like tons of investment capital flowing into the launch sector globally. On one hand, and simultaneously there is like massive express need either from the governments or from you know potential big constellation operators that they clearly want more launch supply. And I think this is roughly the situation the space industry has been in the last 5 years. I think citing a US example, the US Space Force very clearly said in their national security space launch contract that they really want a third provider besides ULA and SpaceX, and still they cannot really get the third provider that would be able to provide the capacity, frequency, you know reliability of launchers they are looking at. And I think this is very similar situation in Europe, where there are obviously I think around like 10 reasonable small launch companies that are well funded and kind of making progress towards the inaugural launch, but none of them really like crossed that bridge yet to actually start providing launch services which both the government and commercial operators want. So that's certainly, and I think this will be changing over the next 5 years, where there are a couple of, medium to heavy lift class launchers actually coming to market sort of globally. And then in Europe, a couple of these micro launchers actually coming closer to their inaugural launch. The other question I very much wonder about is, after the inaugural launches happen, where will the market move afterwards? And so, for example, ISAR Aerospace, they raised, I think, what is it, 450 million euros to date, combination of like equity and debt. And then what I wonder about is, how many launches do you need to do to start sort of justifying return on equity for those? And can you do it purely as a launch player? And I think my intuition would skew towards no. And so I think very interesting development we will see is basically in what way will ISAR either be integrated or decide to vertically integrate on their own. And also the other part of this, and we are seeing this very much in the US, venture funded companies have naturally this like 10 to 12 year time horizon at which, they need to look either for some like big secondary transaction or an exit. And I think few of the European launch companies are now at the 8 year mark. So over the next, 2 to 4 years, they will have to figure out some clever way how to begin returning liquidity to their investors.
Yeah. And you've already touched on something which I also wanted to talk about, which is that the emergence of neoprimes, right? With Rocket Labs going on a spending spree, buying a lot of companies alongside the value chain. That, to be honest, was for me kind of like a surprising development. And then Fireflies did the same, right? If you look at the S1 filing of Fireflies, they are very much presenting themselves as like a systems house which can deliver all defense. Like for me, it read like, okay, hey, we can offer all defense capabilities you might need, and we are this open platform which is there to, as you said, right, fill the gap between SpaceX and ULA. And I also found the timing to be quite interesting. Obviously, it requires a little bit of time to list, but then it just happened that they said that they would go public right after the outfall between Musk and Trump. So I thought, hey, maybe they hope that some investors think, okay, at some point the US government won't be the biggest fan of SpaceX anymore. So they want to then have another company doing this. And I think we see developments going in that direction, right? But yeah, as you've mentioned, I'm also curious. I think that within Europe, ESA being the most well-funded companies, I'm wondering what will their play be? Because as you also mentioned, I think what we haven't seen in Europe that far is like these big exit markets for companies like ESA Aerospace. Now, yesterday, and we're going to touch on this in a second, there was a very big announcement by the German Minister of Defense. And now we maybe see national champions, which are just pumped with money from the national governments, which then will also make it attractive for these companies to list. But then they only can list nationally, or like at least in their markets, or likely the governments want that, so a lot of strings attached.
I mean, for the listeners, it was 35 billion. The German Ministry of Defense, the German government actually wants to invest in 5 years into the space ecosystem. So, I mean, that's 7 billion a year, right? It won't be the same every single year, of course. You have to get a lot of hardware up, right?
Yeah.
So if you are now a sovereign launcher, it's a good, a good times ahead. But the other aspect is you also need to get this up, right? And there was an interesting trend. I would love to hear your opinion on this. Launches always got cheaper and cheaper and cheaper at SpaceX. And, you know, you could easily get a launch within 6 to 12 months. In this year, actually, this changed. So the prices went up a bit. And now people have the fear specifically for larger satellites, right? For SpaceX XL envelope, you know, that it may go until 28. So you need to book now. Do you see this trend, and what is your thought around that?
So actually, I think that we always need to distinguish in the launch markets between costs and prices. So what we are seeing for a fairly long time, that the cost, like the internal cost for SpaceX for a kilogram of mass to be launched is long term going down, but I don't think that is reflected in prices. And actually, sure, there were price hikes this year, sort of commensurate with the inflation across the board, but I don't think this is the first price increase for SpaceX launches in the last couple of years. So we've been seeing every year or every few years there is few percent launch price increase. And on the availability, I know that occasionally there are swap slot where sort of someone leaves the launch slot open last minute, and that's opportunities for companies to fill on a fairly short notice. But otherwise, I think that the 12 to 24 months window for companies to book their launches is what we are seeing for our companies and across the board.
Yeah. So when you think about the supply and demand, right, globally, you say there is enough capacity, but now the sovereignty part is the driver here in Europe and also specifically in Germany.
No, so actually on the capacity side, I think that the global launch market is like long-term supply constraint. We see a couple of these large constellations like Kuiper and some others that are basically trying to get their hands on any launch capacity that is available in general, and always depending on the specific constraints of those companies and who can they launch and who cannot they launch with. And I think that over the last few years we've seen sort of like this maybe third wave of cloud mega constellations with folks like Logos, Univity. There are some people across Israel and Spain. There is obviously the Meridian constellation from Spin Launch. and they all will have to launch fairly substantial numbers of satellites in the next, I don't know, 3-4 years. And unless some of these, promised launchers actually come to the market in like the volume and reliability needed, we will continue to be in like the, very constrained launch environment.
Yeah, and I think that that's maybe also why ESA, for example, has changed their marketing messaging to, hey, we can produce at scale. Like, I think this is in every post from ESA now, every single day.
But I have to say, we were at the factory opening a couple of years back, and Daniel was also showing us the empty factory back then, which is now completely full. Back then, he already also said that they are differentiating through the manufacturing process. And, he told us there will be all this 3D printing stuff and so on. So I think now they had this internal strategy, but now they also communicated externally, right? And I think now people understand that now it really makes a difference.
Yeah. And I think this is something, we see often where what's happening inside companies is, let's say 3-4 years in advance to what become like a domain of public knowledge. So like, obviously Rocket Lab has decided to like publicly discuss their diversified, space manufacturing company only, let's say since 2021, but there are many internal reports that show that sort of they've been thinking about this strategy basically since the start of the company, and certainly since, they started doing Electron launches on a scale. And so I think that there are a lot of discussions behind the scenes that will be, I mean, not more to be said, that they will be interesting for the ecosystem to see.
Yeah. And do you have a clear perspective on, if we think about European launcher, do you, as an investor, have a thesis? What's the clear winner DNA for the European launcher market?
So I mean, expansion is investor in Latitude and Hyper, and I think the winner DNA is execution. Like ultimately, you need to get the first launcher up. You need to demonstrate the capability both to the important national stakeholders and then to the market at large. And then, more importantly, after the first successfully executed launch, you need to continue execute. And I think that especially for the small launchers, there's for every launch there is like a lot of necessary cost that needs to be amortized per launch volume of that given launch. And for small launchers, this is obviously more difficult than for Falcon 9 type of rockets. And then sort of the operational efficiency, how well can you manage the process of getting the approval, doing all of the refueling and ground operations and integrating all of the payloads, and how to manage it in a cost effective way is still, an open battle. And whoever will win, I suppose, on the like operational side, not only of getting the first launch up, but then making sure that they manage to operate the launch vehicle at scale, I think it's completely different discussion, and that will be where the winners are made.
Yeah. So let's switch the topics from launchers to in space logistics, because in your portfolio we could see Osmos X, reusable orbit transfer vehicle. You have others for in orbit, like an orbit production platform with a space cargo unlimited. I mean, there were even more going into that direction, right? I mean, also the rocket motors, etc. So what is your perspective on the in space logistics market? Because I think Sven and myself, we see that in the last 2 or 3 years, right? Also with the exploration companies starting, etc. In Europe, we see a lot of momentum, right? I mean, Impulse Space in the US, right? With Tom Miller, right? They also started to go into this direction. So I see a lot of industry experts, veterans from launcher companies starting in space transportation companies. So what is your take on the industry?
Yeah. So I think there are roughly, two buckets we are talking about. One of them is, the in-space mobility, I would call it, like, transporting objects in space. And then the other one being like in-space manufacturing. And then, we've seen movements on, let's say, the biology side, and then semiconductors and optical fibers. I think those are sort of the three pillars of in-space manufacturing. And obviously, on the later, we are investors in space cargo, but also since this year we are investors in exobiosphere. So that's maybe a company I would like highlight. I mean, they are based in Luxembourg. The founder is Kyle Acherno. He's been the CEO of iSpace US before, and this is one of the, in my view, no-brainer bets when you get someone who has run a company before, who's got some interesting executive experience, someone who has sold hundreds of millions of dollars worth of space services to roughly difficult customers to deal with, I would say, and who hire a bunch of people, and then they come back to Europe and they decide to start a company. And I think that's just like a no-brainer bet to make. And then on the in-space mobility, I mean, I think it's very interesting. You are saying that we see a lot of executives coming from the launcher companies to in-space mobility companies, because it's kind of like a natural continuation of the value chain. And I think that governments around the world said very clearly that like they want this capability of highly maneuverable satellites for inspection, for fast in-orbit transit, especially with different space, or like with different space threats to space infrastructures coming online. The like highly maneuverable capability both on the defensive and offensive side is so really important. And I would say that's where the bet on OsmosX comes from.
Because as you already said at the very beginning, each of these subjects could be an hour. I wanna ask for the final like segment of the space industry on the Earth observation market, because we're an Earth observation company, so we obviously need to ask this. You argue in the content you produce oftentimes for that progress in Earth observation in the Earth observation industry comes from integrating between data providers, analytical companies, and others, rather than just building one technology and then hoping for someone like to do something with it. What would you say is the most exciting development, or what are the most exciting, surprising developments you've seen in the Earth observation space over the last couple of years, where you say that might be interesting what's happening there?
So, and maybe that can be like bit contrarian to something I've seen both with the recent investment we made in Messium, but then also roughly in the market, is that over the last couple of years, everybody started talking about space systems and everybody started talking about defense. But contrary to that, we see a few companies that sort of figure out very commercial use cases with the data/analytics only products that actually are working, are delivering value to the end customers, are sort of scientifically feasible, and produce like a lot of revenue for these companies. And I don't think they often necessarily talk about it in public, but there are a few space operators with functioning hardware up there right now that actually make much more money from commercial than defense customers, and that make more money from the data sales than space systems only. So I don't think that this sentiment that basically the only market for space can be defense, I don't think it's true, and I don't think it's a fortunate way to do it. I think that if the entrepreneurs spend sort of enough time listening to the customers, exploring the capabilities every single EO modality can offer, I think there is actually much more commercial market to still be unlocked.
Yeah, I think, I mean, we also started LiveView because we wanted to unlock the full potential of Earth observation data, right? I mean, you mentioned before that some of the early players in the analytics field, right, they burned a lot of money, right? Like Descartes Labs, Opted Insights, etc., right? Hundreds of millions were burned, and they were started like 2012, 2013, right? Like I would say like a wave before we started LiveView. You also mentioned that actually the companies which are successful now, which spec mainly made revenue with the hardware part of things, right? So, do you think there are some fundamental things which drive this, or is it just a timing thing? Like we first need the infrastructure, and then analytics companies can succeed. Or I mean, maybe a few questions in one question, but would love to hear your perspective on that.
So I mean, what I often come back thinking about, and also when we look at the new companies to invest in, is how can you become a unicorn? And there is sort of like this famous chart when they have different animals representing like different Like you've got two types, you've got two axes. So one of them is how many customers you need, and then the ARPU, how many dollars annually you get per individual customer. And there are many different ways through which you can build a unicorn. Palantir has built their company on few extremely large 100 million plus customers. And then on the social media consumer market, you've got companies that build big companies on $1 to $10, let's say, kind of RPU. So there are many ways how to build large companies. That being said, in the EO, my understanding is that like a lot of the hardware companies can kind of take a shortcut where they only need to convince a few, or I mean, it's not a shortcut. It's obviously a very difficult path, but they can take the path where they convince a few either large, their domestic government buyers from, the defense intelligence sector, or a few large international space, like either space champions or defense companies, to do like a massive either satellite or bulk data buy. And, if you have on the ventures, like for venture-backed companies, you have probably 80 years to build a large company, because before there is some pressure to exit or pivot a strategy or something. And so within this, let's say, 8 years window, it's much more feasible to convince a few individual buyers to do big transactions. And that's what we've been roughly seeing. And also, if you operate your own infrastructure, you can get subsidized hardware, and you have more controls over the cost part of your business equation. Analytics side is obviously more difficult, because up until a few years ago, the data is still expensive and controlled by different licensing regimes, and you guys know this better than anyone else. And there is much easier to go to this path where you convince a few large customers to buy a lot of analytics services from you. And so then you need to go the way where you like convince much more smaller customers to help you build a large company. And that's obviously difficult. I think the big question for the next, 5 years is, I think the intuition is that the data cost should still go down across many, I don't know for optical modality, but let's say for like thermal or hyperspectral imagery, we see many new players coming to the market, and some sort of potential for the prices to actually go down as volumes increase. And that's actually open playing field for analytics layer companies to, I suppose, try to test the chances again.
Yeah.
Interesting. I need to touch on that
Please.
because, I mean, how many discussions did we had on elephants versus ducks, right? So the elephants were the big utilities, and ducks were like smaller ones. So I can feel this. But you just excluded optical imagery from the cost reduction, and why did you exclude optical?
So I think that we've seen, so I think there are like today 3 large optical, or maybe 4 large players on the optical supply. You've got Maxar, Planet, Black Sky, and maybe Satellogic, and obviously Airbus. Unlike for the let's say thermal or hyperspectral, I don't see many new players that would be sort of extremely well fit, that could make like a large revolution for the optical modality part of the market. I think that we've seen some new companies on the like video part, on a very, very high resolution angle. But I think that there you are talking not necessarily about price reduction, but just about much better resolution or capability, but for higher ARPUs and still roughly the same customer. So I think that's one part. And the reasons for it is because the thermal and hyperspectral parts of the market have much less legacy suppliers, and so there are startups subsidized on venture dollars that still are aiming for the price reduction. I think that's one part of it. And the other part is that we've seen, or I think that also on the analytics layer and for the end consumers, we've seen that the SAR, thermal, hyperspectral modalities are actually much more capable than pure, let's say 4-band optical. And as a result, more investment is flowing to these let's say new modalities or like less well supplied modalities. And I think that's what results in sort of price generally trending down for the like new modalities, whereas I don't expect the price to go down within the optical part of the market.
Yeah. Well, interesting. We could now dive deeper in there. There are a couple of things which, and we never spoke about this, we have observed and would agree 100% with some, where I would say I don't fully, because I think that there are still a lot of things which you can do with 4-band optical imagery, which just have not been done because of the difficulty of making business with the operators, right? There's an incredible potential there. And there's, on top of that, there's all the potential with hyperspectral and radar.
Yeah.
So we maybe should like have an entire call on that.
One thing I want to add here also, before I go to the next topic, you mentioned the capital is also important here, right? And if you want to make a difference in optical, if you want to have 50 centimeter or even higher resolution, then just the payload just costs millions, right? And maybe tens of millions in some cases. The systems we see in thermal and hyperspectral are actually pretty small, right? If I think about Kuva space, if I think about Aurora Tech, right, it's multiple U CubeSats which can actually do this, right, and can make a difference. So from the unit economics, it's actually super exciting that these now go up and launch and can create value.
Maybe final question on Earth observation, and this is something which we wanted to have at the end, and now it's already nearly the end, but the question was that you didn't invest in Mesium, right, which is a satellite-based farming company. What I was wondering is, why have you made this investment? Because there have been many Earth observation companies trying to be successful in digital farming, or I should say, in precision farming, and none of them has really succeeded. We've seen companies going to the stock exchange and failing. We've seen so many. I have heard I think every Earth observations entrepreneur's first idea to build something in agriculture. Why have you chosen Mesium as an area as a company to invest in?
No, it's a good question, and I mean, I spent big part earlier this year just doing due diligence on the investment, and basically every single reference call we had said the same thing, that like doing new technologies in agriculture is like really difficult, and then doing new, as you very well know, and as we discussed earlier today, the economics of like the analytics companies for Earth observation is just like really, really difficult. And so, Mesium is at the unique intersection of two remarkably difficult markets. And so we still made the bet, and I think there are few reasons. So one of them is, still the team. I don't know if you had a chance to meet George and Vishal. They are just both extremely smart founders. That's obviously a good foundation, and they are very energetic, determined. They've got the right grit to push this problem through. So that's one reason. And then the other one is that a lot of issues that the air observation downstream companies have, that they tell you like, this is market of endless possibilities, we can do everything. And in contrast, Mesium is doing like they're attacking fairly small part, not a small market, but like one very specific vertical which they went deep into. So it's fertilization for one crop only with one type of data, and then there are obviously other data types they need to use. They target like one type of customers, and everything they've been doing for the last 2 years. And I think the momentum is remarkable, have been very much like to target this one specific problem. And finally, from the conversations we had with their customers, it's apparent that it's actually adding value to them. And then finally, if you look deeper in the company, they actually have a moat, unlike many of their colleagues, either in precision agriculture or in the downstream air observation in general. So very, very excited about the company, and then now they obviously have to execute very well and prove the value. And we are also waiting for many of the hyperspectral satellites to go up, because we need more data.
Yeah, exciting. Yeah, obviously it's a massive market, and I wish them all the best to sell to farmers, which I think might be the hardest part. Yeah, but it's switching gears here completely and speaking about another difficult customer base, but which has a lot of money right now, which is the defense and dual use sector. Where do you see the biggest opportunities for dual use cross-sector applications of space?
So I mean, maybe not like on the market side, but when you look about the go-to-market strategy, something I spend a lot of time thinking about is sort of startups using either primes or neo primes as a go-to-market channel. Let's say, the new space industry has been around roughly, I don't know, for the last 10 years. That's been sort of the strongest wave. And I would say for first part, big defense companies have been roughly skeptical to work with, smaller space startups and companies. And they thought, those are basically kids that are just playing around and don't know how the real world works. And then a shift happened over, the last 3 years for many unfortunate reasons. And the result is that many of the many of the space startups that started, let's say, 10 years ago are now coming to the maturity phase where they can be like meaningful partners to large defense companies. I think that the big primes, for them, there has been like bit of a culture shift that actually we can work with these people and deliver meaningful solution to the end customer, which is typically the national government. And also they realize that there's kind of need for urgency or speed to actually integrate whatever is available today into like the largest solutions, just because the security situation warrants it. And so, we've seen ISI working with Saab. We've seen, Anduril doing partnerships with a bunch of space companies. Obviously, in Germany, Rheinmetall is doing a lot of moves. And this is similar to what we can see, Kongsberg in Norway. They bought two companies. They heavily invested in a third. So I think there is a lot of potential for space companies to go to the primes and have a discussion with them, like, how can we partner together? What can we together to make a right, service for the final customer?
Yeah, Rheinmetall is a good example, right? I mean, when they announced their space strategy, or that they focus on space and then invested in ISI, it was all over the news, right? And you think, oh, Rheinmetall, with all their money, they now go into space. At the end, it's right now, today, it's 12 people doing space at Rheinmetall, right? So it's like a very small unit. So I'm curious what will stick here, right? And I think because for them, they never did space, they need to understand, okay, what do we want to do and where do we collaborate, right? And I think here is what you mentioned is the where the established players who can offer something, right? Like it would not make sense for Rheinmetall to copy that, right? So because honestly, if you think about the 35 billion, which we mentioned before, they will have challenges to deliver just on the core, because there will be so much demand and they will have other core problems to solve. So I think it's a great opportunity to collaborate. Yeah. In your or you
Yeah. So, and I think, what's interesting to touch upon that is the difference between, what's short-term demand and then, what is a long-term sustainable strategy, both for, big orders, both for the defense partnerships. If the partnerships go well, then that's obviously good for both sides, but it's also very possible that in parallel to pursuing these partnerships, the defense players will try to deliver these capabilities on their own. So that's something, to be mindful about. I think something else to mention is, there has been a lot of demand side push by the European recovery constellations, where, Greece and Spain and Poland, they are all building their own constellations. And then the question is, for many European space startups, this has been an attractive market. And then the question is, is this one-off fast, or is there a way how to now transform this sort of one-time demand boost into a long-term sustainable capability and make that, into a profit center, maybe on the data or analytics side? And I think, those are open questions, and with sort of the more market opportunities, I think sort of the strategy angle and then thinking about long-term development of companies is actually more important than it's ever been before.
Nice, yeah. So because we are going to the end of the podcast, we now have seen the full competence across sectors in the space industry, and we talked about some of your portfolio companies. So maybe can you tell our listeners a bit about expansion matches?
Yeah, absolutely. So we've been around for, I think, the last 3 years. It's right now 140 million euro fund. investing in early stage startups, so typically pre-seed, seed, and sometimes at Series A, and then obviously we can follow on quite heavily afterwards. Investing in Europe, investing across space, aerospace, and defense sectors. And today I think that we've got 24 portfolio companies and looking to add quite a few more. We've got a team of around 10 people. Most of them sit in Paris. Then we've got David Dana in Luxembourg and 3 people, including myself, in Sweden.
Nice, yeah. And what was your most recent investment?
I'm wondering what is the most recent announced one. We've been doing that a lot. So I think like over the last month we've announced 3 or 4 investments, if I'm not mistaken. So obviously Messium is one. Reorbit announced 45 million euro Series A, so based in Finland. Very, very happy about that. And then Space Cargo Unlimited, and I think that was 27.5 million, also Series A, largest European Series A for in-space manufacturing company based in Luxembourg. So very, very happy about that one as well.
And how do you manage your deal flow? So how can people get in touch with you? Is it what's the best method to get in touch with you, right? Because we have a lot of listeners from other companies who may raise around.
Yeah, and always happy to get in touch with folks. I think sending me a good cold email is actually good, and the email is Filip at the Expansion's website. So very, very simple. But I think usually when people wanna raise, they will infer the email address. It's not difficult to find out.
Yeah. And I then what also works very well is events, right? Like space events where you guys are. I think you were at the World Satellite Business Week, right? In Paris. You will be in Prague at the Cassini event. So that's, I think, for us, what we always see, right? It's the best way to really get in touch, to have a face and also give a short pitch and not just a cold mail, but also good that the cold mail works with you. So some may take this word now for granted.
Yeah, but I have to say that it was obviously a quick run through all the topics which we could have talked about. During the podcast, I thought maybe we should do deep dive topics with maybe you and a couple of other people on the podcast where we then have a little debate on some hypothesis around the space ecosystem. I think that would be cool because I felt that we scratched a couple of surfaces around a couple of subjects which were very relevant. And I think what definitely has become apparent is that you are an expert and know a lot of very deep facts about some of the subjects which we are discussing here on the podcast. So, Filip, as we're running out of time, thank you very much for joining us today. I very much enjoyed it. I learned a lot myself, and we hope we can potentially count you in for another part 2 or maybe, a panel discussion here on the podcast. So, thanks a lot, Filip.
Pleasure.
And also, thanks to all the listeners. Make sure to also tune in next time when we have the next episode on. Also, make sure to connect with Filip on LinkedIn to follow his readings, also on Substack, where he has a couple of interesting articles where he dives a little deeper into some of the subjects which we couldn't discuss today. Sure, I can assure you that it's worth your time. But apart from that, we have one final question, which is, Filip, who should we bring on to the podcast next time?
Yeah, so I got a bit of an advance warning for this one. I was thinking that Keith Meshbach, the former senior exec at the U.S. National Geospatial Intelligence Agency, could be a good guest.
Yeah.
And what I think is interesting that he has also prolific track record as an angel investor, and I think he's done quite well. So that would be interesting angle to bring up with him as well.
Yeah. And he lived in Berlin from 1988 to 1991 when the Berlin Wall came down. He wrote me once on LinkedIn. So we already have that in common, that he lived in Berlin and we are living in Berlin. So I should reach out back to him. Yeah.
Yes. And I talked a lot about the NGA also at the Space Congress yesterday because, like we talked about how the German defense industry is screening the market, right? And I think the US is way ahead here. Would be great if you make an intro, and for the listeners, we're going to make it happen.
Cool.
Can do. Sounds good.
Thank you very much. Bye.